Right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alix Steel, alongside Scarlet Fu. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast on this Fed Day with Massar and Tim Stenovec as we welcome our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube. Massar, this was a market that really seemed to like what they heard out of Jay Powell. They bid stocks up pretty fiercely while he was speaking. But those gains now evaporating as we march closer to those bells.
That's what's fascinating. We were just talking with Doug Sioka over at Kavar Capital Partners, and that's exactly what he said pretty much, and I was tracking the numbers. We are pretty much exactly where we were, certainly on the equity side of things, just prior to that Fed decision. So quite a ride, and it's interesting where investors are like, okay, folks, we're back where we started, essentially, before the Fed came out and talked about the economy and talked about rates.
Yeah, I think also a bit of relief that Jay Powell said the next move, not that many people were expecting it, but there has been some talk of it. The next move from the Fed will unlikely be a rate hike. Also, Alix, no signs of stag or inflation out there, which I thought was a nice comment.
We want a rap song. We think there's a rap song in there. Stagflation, stagflation.
No. Keep going, Carol. Keep going.
It's going to happen.
Don't do it.
It's going to happen.
But I also think, Scarlett, that if you take a look at what's leading the declines now in the S&P, it's energy when you have oil off 3.5%, and then some tech, and that's really Skyworks Solutions, and that's a semi company. So it's a very specific move lower.
Absolutely. I also want to point out that typically on Fed days, you don't have a lot of volume. Volume was heavier than average leading into the 2 p.m. announcement, and it really took off right when the press conference began. Now 26% above the 20-day average.
All right, we get the closing bells here in New York, and as Carol, I think, was just pointing out here, this really was a round trip here on the day. Stocks pretty much going to end the day kind of where they were prior to the meeting, despite a big spike that we saw in the middle of Fed Chair Jay Powell speaking. The Dow Jones Industrial Average higher by about 86 points or 0.2%. But the S&P 500, which was up more than 1% on the day, going to close lower by 0.3%. Similar trajectory for the NASDAQ, which is also lower by 0.3%. The NASDAQ 100 down 0.7%, and the Russell 2000 holding on to some gains on the day, going to close higher, Alix, up 0.3%.
All right, guys, let's go to Qualcomm, just out with their earnings. And I'm going to go right to the outlook. Let's start there because they're looking at third quarter revenue of $8.8 to $9.6 billion, quite a range there. And it is, at least on the upper end of that, above what the street is forecasting, which is $9.08 billion. Stock up about 2.5% aftermarket. Sees third quarter adjusted EPS of $2.15 to $2.35. That, again, on the upper end, looks like it's certainly above the street estimate is $2.16, and sees, as I mentioned, the third quarter revenue going backwards. Second quarter adjusted revenue $9.39. That was a slight beat. Street estimate was $9.32, and second quarter adjusted EPS of $2.44, and that, Scarlett, was definitely a beat, $2.32. So investors like it, 5.5% here in the aftermarket. Stock is up about 16% year to date, but we're going to look for some more color on that smartphone market.
Absolutely. Qualcomm, of course, the biggest maker of smartphone chips, so its results are really a proxy for the health of the smartphone market. And especially in the case of a company like Apple, we've seen what's happened with the smartphone market, losing its competitive edge in markets like China. The big question, I think, here, Tim, is how AI gets incorporated into Qualcomm's outlook.
Yeah, that is a big question. I'm going to be looking for in the press release to see if there's anything there about that. Also from the call a little later, if anything is mentioned about that. Shares up by 4.3% right now in the after hours, bouncing around a little bit. The headline, though, third quarter revenue, Qualcomm sees it coming in from $8.8 billion to $9.6 billion. Estimate was for $9.08 billion. So that's some good news there for shareholders.
Yeah, just looking at the earnings release a little bit here in terms of AI and how it impacts. The CEO, Cristiano Amon, saying that they're looking ahead. They're building on the momentum that they've seen with their Snapdragon platforms and technology differentiation and connectivity, computing, and generative AI across everything, handsets, automotive, PC, XR, and industrial IoT, Internet of Things.
As we sort of get a read here, though, it's interesting. Another chip company is also reporting Qorvo out. Of course, they make a lot of the IF components that go into the iPhone as well as Samsung phones. Those shares lower in after-hours trading, even though they appeared to beat on the fourth quarter numbers here, but their guidance for the first quarter coming in a little bit light. I'm going to read that guidance to you. They're basically saying that revenue in the first quarter is going to be $825 million to $875 million for their fiscal first quarter. That's below what the street was looking for at $920, and EPS is going to be about half what the street was looking for. They're given a range of 60 cents to 80 cents for the current quarter. The street was looking for $1.29. Once again, a big supplier, Apple, their biggest customer.
All right, just to rehash again, guys, because we are definitely seeing these stocks move in the after hours, and we've seen Qualcomm certainly shooting up here on the news, now still up about, 4.5% here. But again, it does go to the outlook, right? This is what we want to know. And the company, I'm just looking at our right through now, giving a solid outlook and a sign of a smartphone recovery. They are, as Alix mentioned earlier, the world's biggest seller of smartphone processors, or Scarlet mentioned. They gave a solid forecast for the current period. So they are suggesting, at least our Ian King is suggesting in his right review, that the handset demand continues to recover. And this has been something that's been certainly some pressure on the company. But Scarlet, check it out. We're up almost 5% here aftermarket.
Up 5%, but one thing that's notable here is that Qualcomm's Internet of Things group, which creates electronics for your refrigerator, your stove, your microwave oven, that is actually suffering from a glut of inventory, according to this Ian King story. Revenue for that business down 11%, even as we've seen the automotive sales, for instance, rise 35%. So it's not an even move higher here.
Yeah, that's such a good point. But it is the semis, really, and the revenue estimates for the third quarter on the high end looking at $8.1 billion. That's really helping in their licensing business. Also, QTL revenue on the high end, $1.4 billion. The question, I think, on the call is also going to be, when we get the AI smartphones, will there be a secular upturn, and what does that wind up looking like?
Yeah, I mean, I want to hear that, and maybe we'll hear that tomorrow out of Apple if they ever want to articulate an AI strategy. But it really raises the question as to sort of what gets us to that next cycle of smartphone adoption.
Mm-hmm. Does Qualcomm's chip end up powering that next generation of smartphone?
I think it wants to.
It wants to, but
well, I mean, to that point, though, remember, Mark, I can't remember, it was maybe a month or two ago, Gurman had some great reporting on this, saying that Apple was kind of behind, so that bought Qualcomm maybe a little bit more time. But we know that they're developing that own chip, and at some point they're going to try to move on.
Okay, we also have some numbers coming out of DoorDash. I'm going to pull that up right now. Let's go with the second quarter adjusted EBITDA. It sees $325 million to $425 million. Analysts were looking for $394.4 million on average. So DoorDash right now, you're looking at a drop of 8.5% for DoorDash.
Yeah, this is disappointing. I think, a lot of analysts, they are the largest food delivery company in the U.S. They were expected to show some signs of reaching profitability this year. So I'm not sure that investors are saying that this is exactly the sign they were looking for. But again, second quarter adjusted EBITDA, $325 million to $425 million. That low end, it would be extremely disappointing. The street looking for $394.4 million. So not necessarily the outlook the street might be looking for. Color on the call will be really important here.
Yeah, talk about color. Just one thing about Qualcomm before we move on here. Qualcomm saying that Chinese handset sales surged 40% in the first half full year of 2024. So this is, they're going into their third quarter now. So just take into account.
Important
40%.
market for them.
Yeah.
Huge market for them, right? Yeah.
All right, some other earnings out there as well. Keep an eye on Etsy. Those shares down 10% here in after hours trading. At one point, they were down about 15% here. They beat on some of the top and bottom line numbers, but a big surprise on the gross merchandise volume, which unexpectedly dropped down to under $3 billion, a drop of about 3.7% on a year-over-year basis, which I think is where you're seeing the negative reaction. We should point out they did provide some EPS guidance, and that guidance also looks a little bit light as well.
Okay, you were looking at Etsy. I was going through DoorDash while you were doing that. There's a really interesting policy note buried in the press release here that talks a little bit about what happened in New York City and Seattle over the last few months when it comes to earnings. And for DoorDashers, they said, based on analysis of data following implementation of new earnings standards, we estimate local merchants will earn at least $40 million less annually from the DoorDash marketplace in Seattle and at least $110 million less annually from the DoorDash marketplace in New York City due to the new earnings standards. Sort of a rare policy comment coming from a company in an earnings release about recent rules changes.
Yeah, it's interesting, too, that, they've been adding so much to their platform. So you're trying to get an idea of how much this is necessarily moving the needle. But again, on the outlook and what they anticipate has got investors just setting the stock down almost 11% here in the aftermarket. All right, guys, kind of a bucket full of earnings there in some different sectors. So we'll continue to watch them here in the after hours and, of course, into tomorrow's trade. That is a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We will see you again beyond the bell, same time, same place tomorrow.